If you've heard about Bitcoin, but never quite understood what it actually is, this is the episode for you. No assumed knowledge, no jargon, no charts, just Bitcoin. What it is, why it exists, how to get started if you want to, and what to watch out for. Everything. In one episode. If you've already watched the full Bitcoin for Girls curriculum, episodes 1 through 11, this is the episode to send to someone who hasn't. The friend who keeps saying she should learn about this. The partner who's curious but doesn't know where to start. Send them here. Let's go. Bitcoin is a form of money, but it's a different kind of money from anything that's existed before. And understanding what makes it different is the whole game. All money is, at its core, a system for keeping track of who has what. For most of history, that record was kept by someone. A bank, a government, an institution. You trusted them to keep the record accurately. You trusted them not to change it in ways that hurt you. You trusted them to still be there tomorrow. Bitcoin removes the need for that trust entirely. Instead of one institution keeping the record, Bitcoin uses thousands of computers around the world, each holding an identical copy of every transaction ever made. Think of it as a shared notebook, millions of identical copies, all updating simultaneously. Every time someone sends Bitcoin, it gets written in every copy at once. Nobody can quietly erase a page, because every other copy would immediately disagree. Nobody can cheat the system, because the system is the agreement of thousands of independent computers who have no reason to cooperate on a lie. That shared notebook is called the blockchain. It belongs to nobody. It's controlled by nobody. And it can't be shut down, because there's no single point to shut down. Bitcoin was created in 2009, right in the aftermath of the 2008 global financial crisis. Its creator used the pseudonym Satoshi Nakamoto. Nobody knows who that is. They published the idea, released the code for free, and disappeared. The timing wasn't an accident. In 2008, banks had made enormous bets with other people's money. The bets went wrong, and governments bailed them out with public funds. Regular people lost homes and savings. The people who caused it faced almost no consequences. Bitcoin was a response to that. Money that doesn't need a bank. Money that doesn't need a government. Money whose rules can't be changed by whoever happens to be in power this week. Now, why does any of this matter to you? Here's the part that most Bitcoin content glosses over. It's not primarily about price. It's about what the existing financial system actually does, and what Bitcoin offers as an alternative. When you put money in a bank, you don't fully own it the way you might think. Legally, you've lent it to the bank. The bank can freeze your account. It can decline transactions. It can close your account with notice. It lends out most of your money to other people and keeps only a fraction on hand. Bitcoin held in your own wallet, where you control the private key, can't be frozen, can't be declined, can't be seized without your authorization. No bank, no company, no single government can touch it. The key is yours. The Bitcoin is yours. The second thing that makes Bitcoin fundamentally different: fixed supply. There will only ever be 21 million Bitcoin. Ever. That number is written into the code. It can't be changed. No government can decide to create more. No crisis justifies printing more. No election, no emergency, no policy decision can override it. Compare that to regular money. Dollars, pounds, euros, Australian dollars. Which governments and central banks create more of regularly? More money chasing the same goods means prices rise. That's inflation. And it's why the number in your savings account, buys less every year, even when it doesn't go down. Bitcoin can't be inflated away because nobody can make more of it. If you want to own some Bitcoin, or even just understand how it works in practice, here's the process in plain terms. First, you don't need to buy a whole Bitcoin. This is the most common misconception, and it stops a lot of people before they begin. Bitcoin is divisible to 8 decimal places. The smallest unit, called a Satoshi, is 100 millionth of a Bitcoin. You can buy $20 worth, $10 worth, whatever makes sense for your situation. The goal of your first purchase isn't to make a financial statement. It's to understand how the process works. Start small. Learn it. Build confidence. Go from there. To buy Bitcoin, you need an exchange, a platform where you buy Bitcoin with regular money. Think of it like a currency exchange at an airport, but online. Choose one that's regulated in your country. In the US, Coinbase, Kraken, Gemini, Swan Bitcoin. In Australia, BTC Markets, Independent Reserve. Globally, Kraken. When you create your account, use a strong, unique password. Enable two-factor authentication immediately. This is a second layer of security beyond your password. You'll need to verify your identity, passport or driver's license. That's normal, legal, and a sign the exchange is legitimate. A quick word on wallets, because this confuses almost everyone the first time. A Bitcoin wallet doesn't hold Bitcoin. The Bitcoin lives on the blockchain. What the wallet holds is your private key, the proof that you own it, and the authorization to move it. When you buy Bitcoin on an exchange and leave it there, the exchange holds the keys, not you. That's convenient, but carries risk. Exchanges have failed before and taken customer funds with them. For a small first purchase while you're learning, exchange storage is fine. As your understanding and holdings grow, moving toward your own wallet, where you control the keys, is the goal. Your wallet will generate a seed phrase, 12 or 24 words. Write them down on paper. Keep them offline. Never share them. Those words are the master key to everything. Guard them accordingly. Bitcoin is legitimate. The space around it contains people who are not. A few things to know before you engage with anything Bitcoin related online. 3 immediate red flags. 1. Guaranteed returns. No investment guarantees returns. Anyone promising a specific return, 10% a month, double your Bitcoin, is lying. 2. Anyone asking for your seed phrase. No legitimate service ever needs it. If anything asks, a form, a chat, an email, close it immediately. It's a scam. 3. A DM with an investment opportunity. Nobody with a real opportunity is sliding into strangers' inboxes. Nobody. Don't engage. And the thread that runs through every scam in this space: urgency. Get in now. This offer expires tonight. Don't miss this window. If something feels urgent, stop. Research it independently. Real opportunities don't expire in 10 minutes. That's Bitcoin. From the beginning. What it is. Why it was built. What makes it different. How to get started. What to watch out for. If you want to go deeper, the full Bitcoin for Girls curriculum covers all of this in detail. 11 episodes, starting from episode 1. Each one covering a single concept, clearly without jargon. And if you're ready to take your first real step, buying your first bit of Bitcoin is in the description. $15. A step-by-step guide you can keep open while you do it. Share this episode with whoever needs it. That's what it's for. Bitcoin for Girls, the building of a beautiful future. See you in the next one.